Hello, and welcome to another episode of the Real Estate Investing Club, the place investors go to learn tips, tricks, and stories from other investors in the field. If you feel we provide value to you, go ahead and hit that thumbs up, share whatever it may be, and if you'd like for us to cover a specific topic, let us know in the comments or reach out to us through our website. Today we have a very special guest, so buckle up, grab your pen and paper, and enjoy the ride. All right, we are live. Kyle, thank you very much for coming on the show. How are you doing today?
I'm doing great. Thanks for having me on.
Right on. Where are you calling from?
We are from Southern California, so right on the border of LA and Orange County.
Oh man, all right. So you guys are bathing in the beautiful weather down there. We're in Seattle, so I'm a little jealous.
Yeah, it's a beautiful 80-degree day today with the sun out, so can't complain.
Perfect. All right, so to get us started, why don't you tell everybody listening, watching, who you are, where you're from, and then just give us a little brief intro into how you got into real estate in the first place.
Yeah, sure. Again, thanks for having me on. My name's Kyle Mitchell from Southern California, born and raised. And I started investing in real estate in 2010. And at that point, I had a full-time job, was never planning on leaving my W-2 at that point, actually. And I'm sure we'll get into that later on. But in 2010, I house hacked my first primary home. And a couple years later, I sold that for a pretty good profit. And that's kind of what springboarded me into being able to buy my own single-family homes to get started in real estate investing. And then from there, wanted to scale and got into multifamily. So been investing for about 10 plus years now. And our company is now in the value add multifamily space where we buy multifamily in the Arizona markets, Phoenix and Tucson.
Very cool. I love hearing stories about people who just, bought a house hacked it, and then they just, from there grew to something so big as what you're running right now. So that's a cool story. I love to hear it. So you've already kind of touched on it a little bit. You're in multifamily. Kind of tell us what is the bread and butter of your business today. You started in single family, but you've since changed. So what are you doing right now, and what's kind of bringing in the dollars for you?
Yeah, so multifamily value add, which is a space we really like, which is basically forcing appreciation by implementing better systems and putting money back into the property. Whether from a curb appeal standpoint or just from the interiors so that the residents can have a better space to live so you can bump up the rents. And it's all about controlling the NOI. So, really where our secret sauce is in the asset management. I've been in, prior to real estate, I was a general manager and a regional manager for a golf management company. So same thing as property management for apartments, but for golf courses, right? So hiring, firing, implementing systems, driving revenue, controlling expenses, all those types of things. And so I did that for 16 years. My business partner has run multi-million-dollar businesses and had an exit. And so our secret sauce, like I said, is really in the management and operations of the building, although we are an A to Z shop where we acquire the properties, raise the funds for the properties, and then manage them as well.
Awesome. I love it. You just covered a huge swath of things, and there's a lot to unpack there. So I really want to, you're a wealth of wisdom when it comes to multifamily operations, and it sounds like acquisitions as well. So kind of let's start at the beginning. Pretend like you don't have an apartment complex that you own. So start there. How do you go about actually finding the apartment complex, and what criteria do you use to identify, the diamonds in the rough, the ones that you can really add value to?
Yeah, so our criteria, I would say, is different than getting started. Our criteria now is, 1985 or newer product. And there's a reason behind that is because typically things older than 1980s are going to have boilers and chillers and very old mechanical systems that are very expensive to maintain. The older they are, the more it costs to maintain. So we like 1985 for newer, 100 plus units where you can get the ability to put in on-site management for scale. And then just a value add component, whether that's a long-term owner who just hasn't taken care of the property, or is, an owner that just doesn't have a lot of experience, a mom and pop owner, and someone who has operational and management experience can go in and actually implement systems to get more efficiencies out of the property to drive that NOI. For people just getting started, I would say education first, especially in the multifamily space. I started in single family, and you can certainly start in single family by yourself with limited education and get away with it and do fine. But when it comes to multifamily, it's a completely different game. You're buying multi-million-dollar businesses here when you're buying multifamily. And I know there's all this hype about buying apartments, but it really is a business, right? I mean, you have on-site staff that you need to manage and hold accountable. You have things like payroll and benefits and 401k stuff, and you've got to drive income, control expenses. You've got people living in your apartment complex day in and day out. So there's so many different aspects to it when you buy apartments. And so I always tell people to educate themselves first. And that's how we first got started. I came across a video online course that me and my wife did for the first 3 weeks of our education. And then we hopped straight into one-on-one coaching. And we did that for 6 or 7 months. And we also did this with full-time jobs. So I used to drive 2 hours a day, to and from work. So an hour each way. And all I did was listen to podcasts. Every time I'm at the gym, listen to podcasts. And so it was all about educating myself and then modeling after others who had already been there and kind of follow their path on the way to grow our business.
Wow. Very cool. So it sounds like, well, for one, your first piece of advice is to get knowledge, figure out exactly how to do this, because it's not a single family house. There's a lot that goes into it, a lot to manage the property. So that's your first step. And, so actually, how do you go about finding these properties? A lot of people, when they're doing single family, they'll send out yellow letters, they'll do digital marketing, they'll talk to realtors. How is it different in the multifamily space?
Yeah, you can do all that stuff still a little bit with multifamily, but we're in a market now where it's very difficult to find deals. It's the hardest part, and it comes down to building relationships, whether that's relationships with other local investors who you team up with in the market, or brokers, which is the route that we really take. Is we spend a lot of time and energy building relationships and friendships with brokers, and more of a long-term approach versus, hey, let me get one deal now. We've done some direct mail and calling owners and skip tracing and things like that. Nothing yet. But I think with multifamily, with the inventory so low right now, you really have to have multiple ways that you're going about sourcing deals. But I think it always comes down to building relationships, and that does take time. I just yesterday called 50 brokers, and I didn't get a hold of all of them, but I spent 4 hours on the phone and still getting return phone calls today, calling brokers that I call every 3 weeks now because of the COVID situation. There's just not a ton going on, but pre-COVID, every other week, just to check in, see how they're doing, start to build that friendship and that relationship, with the hopes that down the line, we're going to be on that top 5 list.
Wow, that's really interesting. So you kind of have a cadence with the brokers that you're developing relationships with. You put them on a calendar every, sounds like 3 weeks. Sounds like earlier it was even shorter than that. So every couple of weeks you would reach out, just say, hey, checking in. Have you seen anything? How you doing? That kind of thing, right?
Yeah. And, these conversations have evolved over time, which is natural. And one piece of advice I would have is trying to have them evolve quicker. Anything that you can to start to build that relationship, right? So, it used to be like, hey, it's Kyle. Do you got any deals? Right. But they get that a lot, right? And that's not really relationship building. And I see that now. And that's probably one thing I would definitely do better if I was starting out is, ask them how they're doing. How was their weekend? And over time, you get to know they have kids or they don't have kids or they like to do that. And you can ask them about that. This whole COVID situation has also helped because it really has impacted everyone. So you talk about things like that. So, these conversations are not 2 to 3 minutes. What do you have? Nothing. Okay, goodbye anymore. They're, 5, 10, 15, 20 minutes long with each of these brokers, building a relationship, getting to know them, and really honestly caring about their side of the business too. I think a lot of people think of them as robots. They're the ones that provide the deals and they just spit it out. And that's not the case. They have families and they're trying to make ends meet as well. So, it's always about trying to position yourself to make it a win-win.
Yep. I have a lot of wholesalers that reach out to me, and the ones that whenever I'm in a position that I'm ready to take on another property, the ones that pop into my mind are the ones that actually talked to me and didn't say, Hey, I got a deal. Hey, I got a deal. So, relationships in real estate is tantamount. It's the one thing you need to focus on. So I like that you said that.
Yeah, think about it in a way where you can add value to that person, right? I mean, of course, you want them to bring you the deal, but what are you going to give to them other than their commission at the end? But like, what's going to separate you? And we always try and position ourselves in a way to, hey, how can we add value to the brokers? And that's not always easy, but we do things like we bought a handful of brokers in each of our markets, $150 gift cards during the COVID situation. We call them pre-COVID packages. That we sent them out. And so now that they're opening up, they're using those gift cards, and who are they thinking of? They're thinking of us, and so hopefully that helps a little bit to get us to the front of the list and top of mind when a deal does come their way.
Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Awesome. Okay. Okay. So you said in multifamily, it really is, it's a business. You're running a business. So there's a lot of operations that go into it. It's a really difficult topic to kind of broach on such a short, time frame that we're working with. But if you could give a piece of advice on how to most efficiently manage your properties, what would that piece of advice be?
Yeah, everything needs to be measurable and traceable. Okay. Number one, and you always have to follow up. I think where most things fall apart is in the follow-up. You ask someone to do something, you think it's clear, and so you expect it to be done, and you just don't check on it. And you just think it's done, and a month later you happen to stumble across the fact that it's not done. Well, that sets your business plan behind, right? Now you're a month behind on that. And you're just, when those things start to build up, 5, 6, 7, 8, 9, 10 things, then you got a mess on your hands. So, always make things measurable and traceable so you can follow up. And what I mean by that is something as simple as, if the leasing office's goal is to lease up or to make 50 phone calls a week, that's not enough. Like, what are the results of those phone calls? How many people are you going to get a hold of? How many of those are you going to show up and have an application for, do a showing for, and then eventually get a lease for? And it's all about identifying bottlenecks. Where are the bottlenecks happening, and how can you alleviate those bottlenecks? And by doing that is where you really get, your property running the most efficiently. But the only way to do that is to measure and track things so you can identify them. Otherwise, you're guessing. And I see a lot of people thinking the problem is one thing where it's actually another. A great example of that would be, looking at days vacant on a unit. If the only thing you look at is days vacant, you say 60 days vacant, and you say, okay, well, the leasing person is just not doing her job or his job, right? It's been leased for 60 days, or it's 60 days, and the average is 26. Why is that? Well, where was it during that process of 60 days? Was it an eviction for, 25 days? Was it in rehab, and then they had an issue with the rehab and the flooring took a little bit longer to get in, so they had to go an extra week? Where is that bottleneck? And when you start to break those things out, you're able to identify, oh, okay, well, the eviction took a week longer because of this, and the flooring took a week longer because of this. So actually the problem is not with the leasing person. It was just this unit had a specific issue. Or is there a problem with the leasing person? Are we having more leads than usual, but none of them are turning into actual appointments? What is the process going on right there that we can improve upon to get those conversions to be greater?
I like it. So kind of on that topic, so measuring it's really crucial in order to figure out how your business is performing, and where you need to, do some tweaks to improve it. So this is kind of a two-part question. One, what do you use to do the measurement? Do you just put it all in Excel? Do you have some special tool software that you use? And two, what are some of the main KPI that you feel reflect the health of your business the most?
Yeah. So right now we track in Google Drive, and we also have an Excel spreadsheet. So we are lucky enough that our property management company customizes some of their reports for us. And so we have a simple calculator to show conversions as far as leases and applications and showings and well, I'm blanking, but basically it's called LASL. I stole that from Neil Bawa, but basically it's all the conversions for each portion, and so they fill that out every week and they send it to us. And so there's a couple different things that we work on. Right now, though, what we're trying to do is build a tool for our own properties that can pull 50 different KPIs. And that's the thing that we're really focused on right now, is because KPIs and tracking and trends, those are what are going to drive your business. And to be able to see those in a snapshot over a day-to-day basis is really going to help. When you're getting all these different reports from your property management company, you may get 7 different reports. It's really tough to just see really quickly what the trends are. You have to pull a couple of reports, you got to look at a few line items, but so we're working on that, and it's proven to be challenging for sure. Unfortunately, the BI dashboard, which is a business intelligence dashboard, is not being offered by our property management company through their software. So we have to go create it on our own. And it's pretty expensive, but I think it's something that's really needed. So that's something that we're working on. But just tracking trends on, dollar per square foot, rent per unit, how they're going, occupancy, economic occupancy, things like that. Are we tracking up this whole time, or are there, big dips along the way, and why? And I think the biggest thing about tracking KPIs and making things trackable from an asset management standpoint is so you can ask the question, why? If you don't know about it, there's no way you can ask, right? And you need to work closely with your property management company, making sure that they know that you're doing this for the betterment of their business and to also make their job easier. And ultimately, it will make their job easier. But there definitely can be some head clashing if you don't approach it the right way with your property management company.
Yep. Bringing it back to relationships. I like it.
Yep.
So that you mentioned that you guys are kind of working on your own kind of proprietary tool for multifamily tracking. Is that going to be, you're going to consider turning that into a SaaS at some point and offering it to the public?
It's something that we're talking about. We're not sure yet. We've got a long way to go on it, to be honest with you. It's just, it's not as easy as I'd hoped. I honestly hope there's something that's coming out ahead of us, because I just want it for our properties right now. But right now what I do is I just track it on the Excel spreadsheet and I look at it, and it takes me a little bit longer, but it could be something that does come out that we sell to the masses.
Very nice. Yeah. I've gone through a few tools myself. It's hard to find really good ones.
Yep.
All right. So we've kind of talked about your business. We've talked about the nuts and bolts. And you're offering a group course coaching session, correct?
Oh, no. What I was talking to you about is our asset management summit. So it's amsummit2020.com, and that's a free asset management summit. I feel there's a huge gap right now in this market where people are learning how to get started, which is fantastic. And they're getting education on how to get started. But a lot of these people don't have education on running a business. And again, like I said earlier, this is buying a multi-million-dollar business. And so the goal of our summit is to help educate current asset managers, current apartment owners, and new ones on how to set up systems and be more prepared, from an asset management standpoint. And what are the tricks and the trades and the best practices of the best out there on getting the best NOI, and getting efficiencies in your business. So driving income, controlling expenses, driving NOI, staffing, value add, all those different things we'll be talking about, but not at a high level, really getting down into the details of how to manage things. And so it's virtual because of all the stuff with COVID going on, but it's the Asset Management Summit, amsummit2020.com, and that'll be launching here in the next few weeks. And the first day will be September 21st. It'll actually be a 14-day event. So we're going to have a ton of speakers. And again, it's a free event. Would love to have anyone come on.
Awesome. So that for anybody who missed that, that's amssummit2020.com, and that's for anybody who wants to learn how to do asset or how to improve their asset management. Anybody who wants to get into multifamily. So really good resource for you there, amssummit2020.com. All right, Kyle. So we're gonna shift gears a little bit here. I'm gonna take it into a little bit more experiences and stories. Past the nuts and bolts of your business. So we all know real estate. It's a roller coaster economically and emotionally. You got your highs, you got your lows. So kind of take us. What have been some of the what have been some of the low points in your business, and what are the lessons that you've learned from those?
Yeah. So some of the low points I would say is not scaling as fast as I've wanted to, not hitting the goals as fast as I wanted to. And we've set some pretty big goals, but unfortunately, we are pretty conservative with our underwriting, the way we've been trained, which is the right way, in my opinion. So we're just not as aggressive as some groups. And so our deal flow is not as plentiful as some, I would say. So the low points on that is just trying to be patient and understanding it's a process versus, hey, we're just going to blow up and scale quickly to, $500 million in assets. So it's been about really being patient.
Patience is definitely one of the hardest things in real estate. Mm-hmm. That is for sure. Okay. So dealing with the slow pipeline, is kind of a rough thing for you. So now to the top, what's the thing that you love about real estate? What brings you back? What gets you up in the bed or in the morning?
Yeah, for me, it's really just adding value to other people while I learn myself and while I expand our business. It's amazing. This industry is such a giving industry, and going through this whole COVID-19, the amount of information that's been provided to help other people has been inspiring for me to watch. And that's kind of what we like to do. And that's why we're, presenting the Asset Management Summit as well. But as far as anything else, the highest point when, I first got our first deal. We closed on May 29th, and everyone says it's the law of the first deal. I don't know if you've ever heard of that. 3 weeks later, we got our next deal, and that was a pretty amazing feeling. And I felt like we had established ourselves, right? And, little did I know this is just the beginning, and there's a long road ahead. But that was a great feeling. But just accomplishing some of your goals, as an owner of a real estate firm and an entrepreneur, there are a lot of peaks and valleys. And when you're first starting out, I think there's more valleys than peaks, and you start to see more peaks as you go. So I'm excited for that, but it's amazing to see that hard work really does pay off.
Yeah, as you said before, kind of piggybacking off your low point, you got to have patience, you got to have grit. It's been a common theme everyone coming on here has said. So I like that. Just keep pushing, and eventually something's going to happen, and you're going to get more and more of those high peaks, the high points as you go along.
No doubt.
All right. So do you have a favorite deal that you've done so far? Something specific that stands out in your mind?
Yeah, favorite deal is the 42 unit, which is the first deal that we ever purchased in Tucson. We actually just passed 1 year of owning it. We listed it. This was just right pre-COVID, but the property just does so well, right? It's 100% occupied. We've got 6 people on the waiting list. We've been able to bump rent still with COVID going on. And we listed it less than a year of owning it. And the biggest thing for me on that one is being able to provide our investors with the returns that, not just the returns we said, but more. And just seeing the fact that we're helping other people build wealth, it's just been an amazing feeling for me. When you first start, you're doing your first deal, you want everything to go well, but being able to talk to your investors and seeing that things are going well it's a really nice present.
Good feeling.
Yeah.
So how do you go on that topic? How do you go about finding your capital? How do you go about finding your private investors?
Yeah, we have a bunch of different sources, and we're very, I don't want to say mom and pop, more grassroots than a lot of people. We do 506Bs, which are, we need to have pre-existing relationships with our investors, and those relationships take time to build. It's not one conversation and you're investing in our deal. So we have a bunch of different resources. We've got 3 different meetups between Southern California and Phoenix that we host. They're all virtual now with COVID, but before we were doing them in person and plan to again. The summit that we're going to be doing. We have a podcast that airs on Mondays for passive investors, Fridays for asset managers. And then we do free webinars as well. So we just try and add value. I'm on Bigger Pockets answering questions and things like that. So there's tons of different ways. We've got a monthly newsletter as well, but I'm of the mind that, the more kind of fish lines that you have out there, the better chance you're going to be able to catch one. So we just try and add as much value from different platforms as possible.
I like it. So kind of going into, back to that idea of, what keeps you going. So if you could give yourself, you started in 2010, you started in single family, and then you've slowly, you hit those valleys along the way, and now you're seeing a little bit more peaks come along. So if you could go back to 2010 to that Kyle that was doing that first deal in 2010, what one piece of advice would you give him going forward?
Go straight into multifamily.
I like
it. Man. Yeah, I would not be here if I went into multifamily in 2010. Holy cow, that was quite a run. But other than that, constant education, which is something that I still do. But, I think education, you need to consistently educate yourself, no matter where you're at in your journey. Even if you're, one of the most experienced people, things are forever changing. And to stay ahead of people in the value add space, you really need to be creative. And so if you're not educating yourself and thinking about different creative ways, then you're falling behind.
Couldn't say it any better myself. All right. So we try to keep these between 20 and 30 minutes. So we're kind of at the end of our podcast here. But if somebody wanted to get, actually two things. One, what is it that you need, that you would like people to bring you? And two, if somebody wanted to get a hold of you, what would be the best way to do that?
Yeah, so I would check out AM Summit. It's not AMS Summit. I may have misspoke. amsummit2020.com. That's the best place to catch us at right now, because we're going to be promoting that like crazy. Check out our podcast, Passive Income Through Multifamily Real Estate. And we've got a Facebook group by that same name as well. So please reach out. I'm pretty active on our pages and happy to help in any way that I can. As far as what anyone can bring us, an off-market deal in Arizona. How about that?
Multifamily, 100 plus units, right?
Yeah.
All right. Sounds good. Well, Kyle, thank you very much for coming on. I'm positive I can speak for everybody listening and watching. We appreciate you sharing your knowledge in the multifamily space. For everybody listening and watching, if you want to get in contact with Kyle, he just listed where you can go. That is amsummit2020.com, not amssummit2020.com. So go there or go to LinkedIn. Kyle Mitchell, Multifamily Investor Syndicator is what you can search. Other than that, we look forward to seeing you guys on the next podcast.
Thanks, Gabe.
Thank you for joining us on the Real Estate Investing Club. If you feel we provided value, we would appreciate it if you hit that thumbs up, share it with your friends online, whatever it may be. If you'd like to share or partner with us on an investment deal, we are always looking for quality projects. Go to www.therealestateinvestingclub.com to get in contact with one of our partners. Otherwise, I hope you guys have an absolutely fantastic day, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.